Inflows to tech stock funds, I should say, hitting $1.3 billion last week. That's the highest level in more than 6 months. That's according to Refinitiv Lipper data. Analysts at Societe Generale are pointing to the AI craze to help explain this, saying that the S&P 500 would be negative for 2023 if it weren't for AI-related stocks. For more on this, we want to bring in Gunjan Banerjee, who is a reporter at the Wall Street Journal and a CNBC contributor. And Gunjan, this has been something to watch just for the year to date that we've seen. It's been a little crazy, and I think it caught a lot of people off guard.
What a wild ride it's been. I think we're all watching these stocks and all watching stocks like Nvidia, Apple, Microsoft just notch these huge gains. What is even more remarkable is that zooming out a little bit, you're actually seeing people pile into the market, pile into the options market, betting on even bigger gains ahead for these tech stocks. And the 6 biggest stocks in the S&P 500 have gained some $3.3 trillion this year. That's more than the market value of the S&P 500's materials, real estate, and utility sectors combined. And you still have people positioning for bigger gains ahead, turning to ultra bullish options trades and, of course, buying these tech stock funds.
I think you said it reminded you a little of the kind of craze trading you saw during the pandemic.
Absolutely. I mean, this is reminiscent, and traders have been saying this to me, too. This is like the boom we saw in 2020, 2021. I mean, when Tesla, Apple, their stocks were splitting, there was this call options craze, and they just seemed to go higher and higher and higher. And I think that's what's going on right now, where you're seeing people just get ultra bullish. And I think part of that is some people are afraid of underperforming the market. I was looking at some Goldman data that showed that mutual funds and hedge funds, many of them have lagged behind the S&P 500's 11% gain this year. That's the big risk. If you're not holding these mega cap tech stocks, you can get left behind in terms of the rally.
Is it something where people think the gains will last, or do they think it's going to be like the meme stocks where they collapse because there's a lot of froth and not enough that's delivered?
I think there's definitely investors saying that these are looking frothy, but, NVIDIA's earnings, those are real. These companies are generating gobs and gobs of profit. So I don't think it's like the meme stocks, but I do think that you're seeing investors position for their leadership to continue. For example, S&P 500 futures positioning was recently the most bearish it's been since 2007. Whereas in the market for NASDAQ futures, people are betting on that sector to continue its gains.
We've had, you watch the show? You watch when you can. We have Amy Wu Silverman on sometimes. And
she's great, yeah.
She is great. The one thing that she said is not really positioned for is a melt-up. That's the one thing. Everybody's covered looking at everything else. And I thought of her on Friday, and I was wondering, this, a really strong jobs number. We thought it was remember when it first came out, it's like, oh, no, yeah. 700 points. So I just wonder if we're all missing that, where we could be, at 45 or 4,600 before you know it, with everyone always talking about October lows, mid 3,000s on the S&P. But when all you see are 5 stocks taking us higher, you can't help but think this is not real.
Well, one thing that traders have said to me recently is that these periods of froth, whatever you want to call it, can last a lot longer than people anticipate.
Does it broaden out, though?
I think we did see it broaden out a little bit on Friday, right? The Dow had one of its best days of the year. But in terms of people not being positioned for this melt-up, I think that's one reason people are starting to turn bullish.
So then you see the momentum that plays for a while and goes with it. Peter Maluka, we were talking about this yesterday. He posted something over the weekend that NVIDIA currently only has $26 billion in sales versus anywhere from $208 to $525 billion if you're talking about the big 4, Microsoft, Apple, Google, Amazon. How high are these expectations? NVIDIA now trades at over 38 times sales and over 200 times earnings. We've never seen a price-to-sales ratio that high. What do people say about that?
I think a lot of people are hesitant to call the AI craze a bubble just yet. And a lot of it is because we just don't know how this technology is going to be impacting our lives. We don't know who are going to be the winners and losers of this.
Right.
And, these tech stocks had done well for years, even before AI kind of came into the picture. And now they've become the top way for people to play AI. I think a lot of people are still very optimistic on NVIDIA, despite those stats that you just mentioned.
Somebody this morning was saying if you strip out, I guess, those 8 or 9 technology stocks that have really gotten a boost from the AI, you would be talking about S&P 500 that's down for the year, and maybe that's reasonable valuation for the rest of them. Do you think the rest of the S&P 500 catches up? Do you think the high flyers come back down? Where does the averaging out happen?
It's so funny because I'm thinking back to the beginning of the year when a lot of people were saying, we think this is like the dot-com bubble. We think the tech stocks are going to keep crumbling. And that just hasn't played out. It's been so tough to bet against these stocks, Becky. So I'm hesitant to say that we could see that broadening. But I do think a lot of investors are finding fewer and fewer reasons to be bearish, Joe, as you pointed out, where that jobs number was just blockbuster.
Jan Hatzian from Goldman just lowered the expectations for a recession from 35% to 25%.
I'm hearing that across the board. Yeah. I'm saying people saying, hey, maybe that soft landing will come to fruition. Yeah. I'm finding fewer and fewer reasons to be bearish. The Fed looks like it's going to pause next month. What are the other catalysts kind of the next few months? So I think maybe you are starting to see people position for that kind of melt up because of that.